Hey guys! Today we're going to talk about swing trading. Now, what is swing trading? Swing trading is a trading style that involves holding positions in the market for a longer period of time than day trading and shorter than position trading. The goal in swing trading is to capture larger price moves and use technical analysis to time entry and exit. Swing trading. Swing Forex trading. Among the many strategies used by market participants, swing trading is the most comfortable and safe. It does not involve trying to reverse the situation, but allows the trader to follow the natural flow of market processes, using the ups and downs to their advantage. How to use swing trading in your trading. The technique was created in the 50s of the last century by the American developer George Douglas Taylor. The basics of trading strategy and its application are described in the book, The Taylor Trading Technique, The Taylor Trading Technique, on the example of the futures market. The author suggested taking advantage of cycles and natural market dynamics of trends, outlined the principles of holding or closing positions. The US dollar is ready for a strengthening trend. Swing trading, English swing trading, from swing, turn, is a style of trading behavior in which a trader uses upward and downward price dynamics, swing, to extract maximum profit with a minimum number of transactions. Switch to daily charts. A swing is a period of unidirectional price movement between pullback points, a slide, in the market flow. It requires careful strategic planning and a comprehensive analysis of the situation using all possible technical means. In order to avoid risk, you cannot rely on the data of any one technique. Chart. From the swing trading point of view, it is better to rely on information obtained from following the trend in the medium-term range. Daily charts provide a comprehensive and most reliable view of price dynamics. Too long, for example, weekly, or too short, 4-hour, time frames either do not provide a sufficiently complete picture, or distort perception due to redundant data. Find key support and resistance levels. Calculating the levels of resistance and support, i.e. those points on the chart where the price movement changed its direction, is necessary for a trader to assess the stability of the market situation and the probability of continuation of the trend. Both breakouts and bounces from resistance and support levels are taken into account, near which stop-loss points and market entries are fixed. Forex levels. Simple horizontal levels were shown in straight lines on the charts. They indicate the base for swing trading and target areas for profit-taking. Resistance line. Trend lines graphically express the predicted direction of its dynamics. Unlike the previous ones, they need to be systematically adjusted, for example, in cases of upper or lower breakdowns. Trend lines allow you to determine trend reversals and optimal entry points to the market, as well as to position a stop loss. It is better to use their readings in combination with other methods of technical analysis. Understand the current market situation. What is swing trading? Price dynamics develop according to one of three scenarios. If the price forms rising highs and lows, this indicates an uptrend. If the highs and lows are constantly decreasing, then it's a downtrend. Consolidation occurs when the price moves into a so-called sideways movement, i.e. its chart forms a horizontal line. The general patterns are clear: buy on an uptrend, sell on a downtrend. Consolidation signals the uncertainty of the market situation. At this time it is better to conduct transactions based on the support and resistance levels. The profitability of such trading depends on the maximum reliability of price action points, which are always located near the levels. We are waiting for the price action patterns to appear. The price action strategy is based on analyzing the market situation on a clean schedule, i.e. without using any indicators. It allows you to determine the ratio of forces operating in the market: buyers, bulls, and sellers, bears. Review of price action patterns. In the first case, the price moves up, in the second down. Conclusions about the dominance of bulls or bears in price action are made on the basis of observing the price movement, the height of trend waves, the length of candles, the sharpness and range of pullbacks. Only extremely clear, bullish, or bearish patterns are taken into account. An experienced trader can see them immediately. On an uptrend, they expect signals at the support level, and on a downtrend, they expect resistance. Trading. Swing involves flexible reactions of the trader in accordance with the phases of the market cycle, i.e. the definition and use of fluctuations, swings. Their precise identification allows you to calculate favorable entry points to the market. In addition to technical analysis of the market situation, the trader is required to be able to predict its likely changes under the influence of macroeconomic factors. Swing trading on the chart. Timely closing of a trade is a prerequisite for profitable swing trading. It is necessary to calculate the movement goals and develop methods for closing trading positions manually, if there is a risk of losses. Here, the trader's experience and ability to quickly conduct a comprehensive analysis of market trends are crucial. Finding exit points from the market. Setting a stop-loss level is just as important as determining a take profit. It is better to start by identifying the first one. And you should not risk your capital until both indicators are identified. Profit and stop-loss. The goal of swing trading is to cover as much as possible, but not the entire range of price dynamics. In the second case, the risk is too high. In the pursuit of profit, a trader can set profitable exit points that do not correspond to the dominant market trend. It is gradually deviating from the global direction, which is fraught with losses. Calculating the risk level. The so-called ATR multiplier is used to calculate the risk. It determines the ratio of stop-loss and take profit. For example, if the first one exceeds the second one by 2 times, the risk will be equal to 2. A profitable level of risk is considered to be such that the expected profit exceeds the possible loss by more than 2 times, more than 2R. Under such circumstances, it is worth considering the possibility of participating in the game, otherwise it is better to stay out of the market. Trading in consolidation. During the consolidation period, the resistance and support levels look like horizontal lines on the chart. The price dynamics at this time remains within the range between them. This situation favors opening long positions from the support level and short positions from the resistance level. Horizontal channel and trading. In swings, the trader makes a profit from one wave, so you should close positions near any level at which an increase in pressure from buyers or sellers is predicted and a subsequent correction is likely. Trend trading. What is swing trading in simple words? On the contrary, pullbacks favor opening positions. The trader makes a profit in accordance with the price movement along the trend. The stronger the pullback, the better the ratio of risk to expected profit and the higher the chance to earn. The search for pullbacks on the chart is performed using a moving average with a period of 50 MA. This is the most common parameter among traders. Strong markets use a moving average with a smaller, 20, period, while weak markets use a larger, 100, period. Trend reversal trading. When using an anti-trend trading strategy, first determine the resistance levels with the largest price bounces. There are entry points near them. You should wait for the next approach of the price to the selected level and open positions on the correction of price movement. Best Forex trend reversal indicators. Entry points. There are 2 possible strategies for placing entry points. A position is either opened immediately as soon as the price reaches a significant area, or they are waiting for a clear signal to enter the market. False breakout and pin bar are reliable indicators. False breakout of the horizontal level. The first one is fixing the price above or below any resistance level with its subsequent correction. A breakout encourages many market players to open long positions. With the subsequent reversal of the price, they are at a loss. Opening positions on a false breakout gives the trader an advantage over other market participants trading long. Pin bar is a reversal pattern in which the candle has almost no body, and the price closes within a quarter of its range, while the shadow is at least twice as long as the body. There is a distinction between bullish price in the upper part of the range and bearish price in the lower part of the range, pin bars. The first type of candle shows that buyers have taken the initiative from sellers, provoking a sharp pullback from the price low. In the second case, the market situation is reversed. Where is the best place to put a stop loss? The best option is below the support level with a large range, 100 points. This allows you to prevent possible stop-loss moves and give the price dynamics room for natural development. Setting a stop-loss in the ABC pattern. The claim that minimum stop-losses reduce risk is wrong. A small stop-loss does not guarantee anything, but only prevents you from following the market cycle in a range sufficient to make a profit. How do I collect my profit? In swing trading, the player follows the price trend along the wave and closes positions before the price reaches a peak and makes a reversal. A common mistake is waiting for the top of this wave to exit the trade. The price can be adjusted earlier, and then the trader will be at a loss. Exit the market at the level closest to the crest of the wave. Managing a transaction. You can keep open positions actively and passively. Forex trader. The first method involves constant monitoring of price dynamics and a flexible response on the part of the trader, who has to make decisions about closing or holding positions. This is a psychologically complex tactic, but it allows you to track and minimize risks in a timely manner, leaving the market at the first sign of a close price reversal. Using the second method, the trader allows the price dynamics to reach one of two limiters, stop loss or take profit. In this case, it is better to place the first one far from the entry point, and calculate the second one according to the identified price action patterns. Such trading causes a minimum of inconvenience, but also gives minimal profit. There is no way for a trader to exit the trade at the first sign of a pullback. A strategy that works. Based on the results, you can deduce the basic rules of the trading strategy in swing trading. The market is in consolidation. The trader waits until the price approaches resistance or support levels and a false breakout occurs. On the pin bar, he opens a position by placing a stop loss with a small buffer for the price below or above the level. False breakout after consolidation. The market is trending. Entry to the market is made when the moving average is reached. It is better to use 50 MA. The trader is waiting for a reversal pattern to appear on the chart. The stop loss is set with a small interval from the entry point, 1 ATR. It will suit you if. Do you prefer quiet trading? Do you want more freedom or have a full-time job? You don't mind a small number of trades with more earnings on each one. You are ready to hold positions for more than one day. Who is suitable for swing trading? It won't work for you if you don't like to wait and you don't like to transfer positions for long periods of time. Do you want to take profits frequently? You are emotionally unstable and strongly experience unfavorable price reversals for yourself. You want to test your strategy urgently. To learn more about the Traders Never Sleeps course, follow the link below. So, market participants include in swing trading strategies to use fluctuations in price dynamics to make a profit. Following the trend is the safest behavior model for a trader who prefers calm trading. ATR Breakout Forex Strategy, plus 154% on Eurist in 12 months. The ATR Breakout Forex Strategy is based on the ATR indicator readings. In consolidations, this indicator falls, and it can be quite difficult to trade. As soon as this indicator starts to grow, the probability of significant movement increases, and this principle is the basis of this system. The risk for each individual trade was 3%. The drawdown did not exceed 12%. Conditions for entering short. Sell breakout ATR. 1. At the close of the next H1 candle, the ATR indicator crosses its own moving average from bottom to top. 2. The intersection candle has a black body. Only in this case, on this day, you can consider sales options. 3. If the price has already broken down the red fractal, then you need to measure the distance to it. If it is less than 4 points, then the entry is made at the market price. If the distance is more than 4 points, then a limit sell order must be placed 1 point below the fractal. Important: the closing price of the signal candle is no further than 20 points from the fractal level. Otherwise, you should skip the signal on that day. 4. If the nearest fractal is still not broken, then you should wait for this breakout and, after that, consider entering the trade with the conditions described above. 5. Once these conditions are met, you should pay attention to the BB_trigger indicator. Its red line should be higher than the green one. If this is still not the case, then this signal is skipped. 6. Safety order stop loss is set for the nearest red fractal, but it should not be more than 30 points and not less than 20 points. 7. After the price passes 20 points in the plus zone, the transaction is transferred to the break-even point. 8. Profit-taking order take profit is set at a distance exceeding the size of the stop-loss order by 3 times. 9. If the ATR indicator falls below its moving average and the price is in the zone, then the trade should be closed at the current market price. Conditions for buy. 1. At the close of the next candle, the ATR indicator crosses its moving average from bottom to top. 2. The intersection candle has a white body. Only in this case, purchases can be considered on this day. 3. If the price has already broken up the blue fractal, then you should measure the distance to it. If the distance is less than 4 points, for 4-digit quotes, then the entry is made at the market price. If it is more than 4 points, then a limit buy order is placed 1 point above the fractal. Important: the closing price of the signal candle is no further than 20 points from the fractal level. Otherwise, the signal is skipped on that day. 4. If the nearest fractal is not broken, then you should wait for this breakout and then consider the entry with the conditions described above. 5. Once these conditions are met, you should pay attention to the BB_trigger indicator. Its red line should be lower than the green line. If this is not the case, then this signal is skipped. 6. Stop loss is set for the nearest blue fractal, but not more than 30 points and not less than 20 points. 7. After passing 20 points in the positive zone, the transaction is transferred to break-even. 8. Take profit is set at a distance exceeding the size of the stop-loss order by 3 times. 9. If the ATR indicator falls below its moving average and the price is in the negative zone, then the trade should be closed at the market price.